Welcome to the Daily Exchange, where we are here in Singapore with Nicolas Pelecanos, founder of Steer, co-founder of BCMG, and currently making a move to Nen Ventures.
That's right, yeah.
I understand Steer, which you founded 2 years ago now, has grown to become the largest student trading body in Australia. Is that right?
So just a quick caveat of that is Steer actually grew out of what's called QITIC. So that was the Queensland University of Technology Trading and Investing Club. That was a club that was basically formed to learn how to teach people how to trade. So I had this view that if we had a bunch of people looking for opportunities in the market, we'd probably find more opportunities, even though they're all uni students and didn't really know what they were doing. But one of those opportunities that we did find was Bitcoin quite early on. So we got involved in crypto early. We've been looking at how to trade that for a long time. Out of QITIC, I started a company called Steer. Steer initially was heavily focused on trading cryptos as sort of like a proprietary firm. It's evolved into a execution trading desk. So yeah, that's the difference between QITIC and Steer. Yeah.
Right, so a fair bit of trading background there.
Yeah.
Starting with Bitcoin in the early days, and just looking for the most effective way of trading it.
Yeah.
Yes, it can't have been easy. Complex market, really variable.
Yeah, so I guess the easiest way, my sort of view on the market, theory on how to trade it, is sort of trying to catch the sort of less frequent but larger moves. So I'm not really interested with the intraday movements. You can drive yourself insane trying to catch that, going long, short. Statistically, you will lose. Majority of people who try and do intraday trading end up losing their account. So what I'm more focused on is, like I said, those sort of bigger moves that are, if you look at a distribution, are less likely. So that's kind of what my strategy was formed around. Yeah.
So how do you predict these big moves? I understand you got the usual trading signals, extensive growing volume over a period leading to, you draw squiggly lines in the charts.
Lots of squiggly lines, yeah, of course. So look, I think before you do any of the squiggly lines, it's important to just have an understanding of the market dynamics. Think about the market as like a machine, and there's all these little cogs inside the machine that are turning to keep it going. And the more of a framework you can build and understand how these cogs are turning, the better understanding you can have of price action. So I have a framework in my head of this is how it works. So I believe there's cycles in the market that if you can catch those big moves, I was talking about earlier.
I guess that's the dream, right? You can take the big moves in 2015, 2011, 2012, and 2017. Those are Bitcoin's big moves, right?
Massive moves, yeah. So they're massive moves, but if you can get in early on those moves and just stack on your position, your top end exposure can be massive, right? Particularly if you're using leverage. But your risk is actually quite small because you've been building over such a long time that a pullback in the market, like you can basically have free money after a while. If the market keeps going up, so that's when you're clapping hands. But it's not those mega moves that I'm talking about. Like, every sort of 60 to 90 days, you can expect to see like a move of say 10 to 30%, right? So this is one of the cycles that I look at. This is one of the frameworks that I build on top of, and then take the view, build on the hone down on it. So like top-down analysis. This is my view. I'm coming in, just honing it in, and then put your money on the line. So
that is not financial advice. In fact, none of this is.
Yeah.
What do you think is responsible for these cyclical 60 to 90 day larger price moves?
Well, look. One of it is just the madness of the crowd, you know. So there are cycles in everything, you know. There's cycles in the universe. Life is a cycle itself, if you want to get deep. Humans predictably will do things at certain times, right? You know. Yeah. And I believe in crypto, that's just what we're seeing. There's like some form of 69-day cycle. That I also think there's a lot of manipulation going on.
Yep.
Controlled pump and dumping of the market, especially you see it in alts, but it is rife in Bitcoin as well. So this is why, people talk about an ETF. I think an ETF is a long way off because that market is seriously manipulated. Like I've looked at Bitcoin price action probably more than anything I've ever looked at in my life, and I can tell you unequivocally that the market is controlled and manipulated.
The market looked and said, "This is very heavily manipulated. I want to trade that market."
Yeah, well, if you can understand the frameworks, you know how the cogs turn, then you have an avenue to profit.
So what kind of manipulation is going on? Is it just the whales? Is it exchanges themselves? Is it your margin trading platforms busting their own users?
Probably all of the above, yeah. So, if you look at the price action of Bitcoin over the last, say, 2 weeks, on say a 4-hour time frame, maybe even smaller, like an hour time frame. You could probably see it on the days, to be honest, but you'll see that Bitcoin will find a range, so you'll find a support and resistance, and then you'll get generally about in the middle of the range, you'll get one really big wick up and another really big wick down. So essentially, that's a manipulator just triggering orders on both sides of the range, so long, short, liquidating them, getting in positions, and then selling into other people. So, this stuff's happening a lot. I prefer it when it's just going up. Trading a range is a very dangerous thing to do. I actually try to avoid it because of reasons like that. Yeah.
Yeah. So that's kind of what does come wipe people out of the market. These kinds of. This is what comes and wipes people out of the market. These manipulations.
Yeah. Mass manipulation. So.
So for a company with a bunch of crypto holdings, they want to ideally try to avoid these. Yeah. Right, a company that does have a bunch of crypto holdings, a bunch of other assets, if you want to know how to diversify this and weather the storms of the crypto market, right? Do you try to actively avoid them, or you just hodl through it?
Look, that's the thing. Like, if your view is that the price of crypto assets and Bitcoin is going to go up, I think it's easy to just buy and forget about it. Like I said, I spend all day, every day, working on trying to figure out what's going to happen on the right end of the chart with a bunch of other people who are way smarter than me, and we just pumping all of our resources into figuring that out, right? So the majority of participants in this market are retail investors. They don't have the time or the resources to really figure out what's going to happen on the right end of the chart, so they become sort of like bait to whales, if you want to use that analogy.
A whale bait.
Yeah.
So it does suggest that managed crypto funds could be a way forwards. If your retail speculators do want some exposure to the markets, then you probably don't want to try playing yourself. You let someone else do it.
Yeah, I think just buying Bitcoin. One thing Bitcoin to me has the strongest fundamentals of any of the crypto assets. I think what we're going to start to see over the next sort of 1 to 3 years is the protocol wars. So there's all of this development going into building a protocol that can do X more transactions than the competing protocol per second and be the most decentralized, right? That's essentially what you want from these protocols. Now, those protocols are really, some protocols might have better tech, but the protocols that are going to be around 10, 15 years are going to be the ones that people build on, right?
Yeah.
So the protocols that have the vast pools of capital, the network effects, I think we're going to really see a lot more emphasis on those factors for sort of crypto 2.0s like Ethereum. We're going to see a lot more emphasis on those factors when people are trying to pick what's going to go up, right? But it's still sort of going to be volatile. I think, if you look at global macros, we've got negative rates, we've got massive debt, we've got global unrest. I think Bitcoin, well, what we are actually seeing Bitcoin being used as a hedge against global uncertainty. So what was it like about 3 weeks ago, a dump in the S&P 500 correlated to almost a minute with a pump in gold, but also interestingly BTC. So gold's generally that haven asset, safe haven asset. BTC rallied, so that just shows like it is starting to become a global player in a hedge against global uncertainty. Now the volume going in was minuscule compared to gold, but we've got custody coming online. I think that'll help. I'm speaking to like a lot of sort of financial professionals, like accountants, stockbrokers and stuff. A lot of people are saying like, how do I get exposed into crypto? So, I think sort of just like real surface level fundamentals, like it kind of looks strong. So, I'm more bullish BTC than sort of like saying like a utility token or something. Protocols, there's definitely protocols I think are going to emerge as, like I said, if we're going to go to this protocol wars, there's going to be these protocols that will win, people will start building on them. So I think that's sort of the next, that's where the next gems are. I think people who are looking to try and like catch a utility token pump is too difficult, and it's probably not a long-term play.
I guess Bitcoin's not easy. After all, that gold pump did rewind itself a few days later, I believe.
Yeah.
And the fundamentals aren't quite there yet.
Yeah, well, again, it's like, it's a speculative asset that's manipulated. So, yeah.
Definitely trade at your own risk and then some.
Yeah.
Thanks for joining us, Nicholas.
No worries.
Pleasure.
Thanks for chatting. Thank you.
That exchange.